All right. So in this module, we'll discuss about management fee. How do we calculate management fee in private equity fund, like real estate or normal private equity funds or venture capital funds. So let's discuss about it. So meaning like management fee are periodic, charges, usually 2% annually paid to the GP for managing the fund. So, especially in private equity, during the investment period, fees are charged on committed capital. Afterward, they are charged on invested capital. So it means initially, private equity fund managers will expect the fees will be charged on the basis of committed capital, right? Because initially, what happened, like the investors they signed commitment, right? And once they sign, let's say commitment, then let's say someone let's say XYZ investor signed commitment for 100, let's say 1 million, look, right? So just calculate 1 million into 2%. So that would be your management fee. All right. So we have an example, let's say the investment period, look at this. Fee base would be like 500 million commitment. Annually would be charged 2%. So 2% into 500 million. So that would be 100 million. So 100 million you can divide by 4, which is 4 quarters should be 1 year. So just divide it. So you will have 2.5 million as a quarterly management fee. So post investment fee base is like equal to 400 million invested. Annual fee, see, there is a way like initially would be charged on commitment, and after that it would be changed, like method will change and would be charged on invested capital, right? So then after like post investment fee base, like let's say the NAV of a fund which is at a 400 million, which is like invested amount. Annual fee, let's say 2%. Again, 400 million into 2%, like 8 million. 8 million that you can divide by 4 would be around 2 million. So 2 million fees will receive to you. So look at the flow. So committed capital 500, fees was 2.5 million quarterly. Accrual you can book, and even that can be even paid in cash as well, or maybe at the time of capital call, or can be initiated capital call to collect that management fee, vice versa. I mean, there are a lot of ways to do it, offsetting or calling capital from the LPs for management fee adjustments and all. All right. So now if we look at the, let's say quickly, summarize investment period, it means fee base would be like committed capital typically for first 5 to 6 years and higher fees amount. So post investment like fee base would be invested capital and remaining fund life, or lower fees. So you may expect questions in your interview process. So you should know it. What are the means? How do we calculate management fee in a private equity, real estate funds, or venture capital funds, etc. All right. So look at the example. Let's say we have an example. This is an example. Let's say fund size with 500 million for XYZ capital fund. Management fee rate, it was 2% annually, and investment period was decided like 5 years, and invested capital which was like 400 million. So for first investment period, you can calculate fees on the basis of like 500 million into 2%, divide by 4, 2.5 million would be quarterly. And after means 6 years, look at this, the fees would be like 400 million into 2% divided by 4, like 2.5 million quarterly. So this is how basically we do calculate management fees. So even you can see in a timeline as well, quarter 1 5 on a 500 million, so you can charge 2% or calculate 2%, that would be like 2.5 million quarterly for investment period, and post investment same, like, but the base will change, would be like invested capital 2% and 2.5 million quarterly. So this is how basically things works, or we calculate management fee. So now if I talk about, let's say, journal entries for a management fee, look at this. So fees accruals quarterly, management fee expense account debit to management fee payable account credit. This is how we calculate post journal entries in the books of account, like record the quarterly management fee obligation. Then the second one, fee payment. Let's say the management fee, it was payable 2 million, and management fee prepaid, it was, let's say, 500 million. then cash total would be around 2.5 million. So it means 2.5 million paid something like 2% paid maybe for the last accounting period, and 5 million here, sorry, 0.5 million, 500 looks like paid for a next accounting period. So this is the combination of like payable and prepaid expense journal entry. All right, then the third one, look at the here capital call for fees. Capital call for receivable account debit around 2.5 million. This is the third scenario, and maybe here like the credit would be unfunded commitment for 2.5 million. Call capital from LPs to cover management fee. In that context, this would be your journal entry. The 2.4, fourth number, the journal entry for, let's say, limited partners capital receipt. So it means they have GP have received capital for management fee. All right. So then entry would be cash account debit to capital call receivable fee account credit. So this is how we perform journal entries for management fees transactions. You may see a lot of different entries and all, because there are different scenarios like holdback management fee, advance, then received in advance or maybe paid in advance. So and so there are a lot of things, but still this is something base that you can treat and try to understand the calculation of management fee and journal entries related to it. All right. So now if I talk about key accounting points, fees are accrued quarterly regardless of payment timing, and prepaid fees create an asset until earned. So capital calls may be made specifically for a fee coverage, and fee base changes after investment period ends. So this is how basically we do calculate the management fee and even post the journal entries in the books of account in this way. Look at the GPLP structure quickly. Of course, management fee would be treated as an expense, so would be impact on profit and loss account statement. Then same would be if the management fees, let's say, which is payable, then we'll have to record it to the liability side. Same if I talk about, let's say, management fees prepaid, of course asset account will impact because fees paid in advance, and capital call receivable, if you look at that portion, again would be recorded to the balance sheet's asset side. All right. Then the unfunded commitment, of course, reduces when the capital call for fees, that you might see impact on even equity capital account as well. So if I quickly look at the flow, cash, of course, payable and expense, this is how you can see a flow. Capital call receivable, of course, that you can link with unfunded commitment, and accrue minus accrual expense, then create payable, call capital means initiate capital call, and collect cash and pay to GP. This is how you can see a flow basically in short. If you look at the trial balance, look at this how it looks like. Cash, of course, it's a debit balance. Management fee, of course, again it's a debit balance. Capital call receivable, debit balance. Investment, again debit balance. Management fee payable, credit balance. Partner capital, credit balance. Unfunded commitment, credit balance. Management fee expense, debit balance. So this is how you would see impact on trial balance as well. So now let's look at the 3 questions what we have for management fee. You can try it. So question number 1, during the investment period, management fees are typically charged on what basis? Tell me. I think invested capital. Oops. During the investment period, fees based on committed capital. The answer is committed capital. Nice. In a fund, if a fund has 500 million in commitments and charges 2% management fees, what is the quarterly fee during the investment period? You can calculate and quickly tell me. So quarterly, I think it'd be 2.5 million if I'm not wrong. Yeah. Yep. The last one, which journal entry correctly records the accrual of 2.5 million quarterly management fee? So I think it is asking about, I think, payable, right? So let's log the first one. Yep, I'm done. So this is how, guys. I mean, in terms of management fees. Now, if I quickly summarize, there are ways to charge management fees. I mean, on the basis of committed capital, invested capital, or capital call basis. A lot of different approaches that you would see. But this gives you base. How do we calculate management fees in a private equity? And maybe for an interview purpose, or maybe let's say even if you want to set up your own fund, these are the key things which you should know it. How do we calculate, how it works, how do we record them in the books of account? All right, so I'm done with this module. We'll see you in next module and we'll discuss in details. Thank you.